call a subcommittee meeting to order for Senate Study Bill 3001, which would be the Senate version of what property tax reform has the opportunity to look like here in the state of Iowa. As I stated last week, I think it's always important to start off with the why. And I think as we go through these discussions on all the bills throughout here, why becomes very important. And the why for this topic in this General Assembly is for the fact that Iowa has some of the highest property tax rates in the nation. We are 10th or 11th highest, depending on where we're at. And the why is that the current system right now is broken for a variety of reasons. The Iowa legislature, via the Constitution, says the General Assembly has the responsibilities for property taxes. When we hear so much from our constituents, and we know anecdotally, we can look all over, this thing is broken. And we know what's happened in the last few years of the rising assessments. The legislature, it's time for us to step in. So, the bill we have before us today is very lengthy, but the principles are simple. And that is, when assessment growth rises more than 2%, your property tax rate should come down. We want quality roads and bridges here in the state in an attempt to find a reasonable way to fund those quality roads and bridges. We want every homeowner to have a 50% homestead exemption with the overall principle that we want property you have for your family and property you have for your business. And finally, for seniors, at some point in time in their lives, once they have their house paid off, shouldn't the public policy position be that they get to own their home? So in the bill we have before us today, it sets the age of 60, and I know there's lots of discussions on that, and we're going through those discussions, but ultimately, for that first half an acre, and for your house, those true mom and pop senior citizens out there, once they own their home, should they have the opportunity to actually own it and not pay involuntary property taxes? That's the Senate vision. I know there's a lot of opinions out there, and we're getting a lot of good feedback. I do want to say up front, we've already had a variety of meetings. We already have an amendment kind of working a little bit, more pen to paper here, but I do appreciate all the collaboration we've had. There's still good ideas coming in, right? And this is a complicated effort, but if we're going to do this right, it's got to be a complicated solution. That concludes my opening comments, and we'll just go around here. Senator Schultz? No. Senator Winckler? Senator Okay. What we're going to do is we'll go around the room, who you are, who you're with. We will state your comments towards the bill, positive, negative, ways for improvement. And then when we go online to Zoom land, and if you wish to speak, click the reaction button at the bottom of your screen. That will visually indicate to us you wish to speak to the bill. Thank you.
Hello, good afternoon. Sarah Allen, representing the Iowa Extension Council Association today. Appreciate bringing the bill forward in the PAC room today. The Extension Councils provide services all throughout Iowa. When you think of things like 4-H, your local county fairs, extensions are kind of the heartbeat of those rural programmings in communities. They also provide a ton of agricultural education to farmers throughout the state. We're here today to just say we have been working with Senator Dawson on this bill, and look forward to continuing to work and discuss this bill. Thank you.
Craig Walter with Iowa Assisted Living Association. We are monitoring the bill. We just want to make sure that we don't have any tax shift on our properties out there. So we will be watching this as the system works.
Angela Rengians with the DeWitt Chamber and Development Company and a member of Professional Developers of Iowa and their board of directors. We're here to communicate some of our thoughts, and I'm going to leave that to another representative.
Kylie
trustees, Common Good Iowa, we are registered against this bill. There are a few positives that we appreciate. The considerations on inflation, year-over-year inflation above 2% is the new normal in this decade, but they're just outweighed by too many highly regressive tax provisions for us to support it. First of all, increasing the gas tax and the local option sales tax just takes the cost of funding these tax cuts out of one pocket and puts it into another, catches low-income, middle-income Iowans every day. Will hit the lowest income Iowans the hardest. And on the homestead components, we have a number of concerns about who those will most benefit. The first is that the exemption is 50%. As you know, percentage exemption is a regressive tax that grants a larger tax break to those with higher value homes. The unencumbered homestead relief for Iowans 60 plus is probably the most unequitable provision of this bill, in our opinion. Not only are many Iowans who would receive relief in this group still of working age, Fed data shows that Americans 55 to 75 have the highest median net worth and financial assets and the lowest rates of mortgage or home equity liens. There's no policy justification that ties your obligation to the bank to your obligation to your community. Our recommendations for better ways to target residential relief would be circuit breakers for those who are paying the largest share of their income in property taxes. Some options for that may be seniors on fixed incomes, low-income homeowners being priced out of a developing neighborhood, or those whose financial circumstances have changed. Deferrals are another way to provide relief to illiquid homeowners, allowing seniors to age in place and communities to eventually recapture that lost revenue.
Ma'am, I was going to correct you on some of your information there real quick. When you say it's regressive on the 50% homestead, it's capped out at $700,000. So I don't know how that could be regressive there. I just invite you maybe to reread the bill again on that. I got your point on some other things there. It's probably going to be an intellectual disagreement. But to say a 50% homestead is regressive that benefits the wealthy when there's literally a cap on that seems to be a little intellectually dishonest. Further as well too, well, I'll come back to that here in a minute. But just to correct the record, what happens when the rollback goes up to 56% or 58%? Does that impact some of those Iowans that you're just claiming there that you are looking out for?
I'm not here to debate with you. This is your policy decision to make. I'm sharing our opinion based on the research and numbers that we have.
Okay. Well, as long as our opinion is based in facts, I don't mind that there, but we just want to correct that record. Thank you. Okay, next one.
All right. I'm Delia Meyer with Iowa 80 Truck Stop in Walcott, Iowa. I am second generation. It's a family business. We're headquartered here in Iowa. I've got my daughter with me, so third generation. And I just wanted to talk, we're opposed to the automatic increase on Division 10 on the fuel tax. Truck stops are a business-to-business. Diesel is a business-to-business transaction, and it's very, very competitive. And I think an automatic increase, or it gets out of hand. I also have a truck stop in North Carolina. 10 or 12 years ago, North Carolina put an automatic increaser in their fuel tax. And where we used to be middle of the pack in North Carolina, now it's a very high tax state. And so we really struggle to get volume. You know, it gets out of hand. It should be debated, I believe. And, you know, if it never goes down and it always increases, that's a very difficult situation for us. And we're talking about forever. And I just think it's dangerous. You know, if you want to talk about competitiveness, one of our customers that we're dealing with out of Eldridge, a trucking company, you know, we lost a business over $60 a month. He's choosing to send 100 drivers across the street, you know, and not be at the world's largest truck stop with free parking, with everything else we offer, over $60. That's how tight their margins are, and that's what we're dealing with. So I just encourage you not to put an automatic increaser, an automatic tax increase. It's very uncompetitive for us.
Okay, follow-up question, ma'am. Is there any fuel tax increase you actually do support?
Yeah. You know, I think everybody is pro good roads, and I think it's an issue, and I think it should be, we should decide on an amount, and it should not go up forever.
I get that, but from your policy history though, have you ever supported a gas tax increase?
No.
Okay, thank you.
Nate Driscoll, Iowa Taxpayers Association. First of all, I want to thank the Senate again for bringing forward this bill, having this conversation about property tax, critical one to have this session. Also want to thank Senator Dawson for the time you've taken to speak with our association and meet with us on this bill in particular. I'm going to start just talk about a couple of things that we actively support in this bill. First being some sort of a levy limit, some sort of a spending limitation that will provide uniform mitigation of property tax increases for all taxpayers. We also support items in section 53 and 132 dealing with market distorting transactions. We do think that that clarifying language is helpful, particularly for commercial taxpayers. But really, I'll spend most of my time talking about the big portion of this bill, eliminating rollback. ITA has a number of principles that we follow, 3 of those being neutral, fair, and simple. Eliminating rollback certainly meets those principles of creating a neutral tax system, a fair tax system, and while unrolling what has been 50 years of a tax shift on commercial and industrial taxpayers isn't simple, the end result is a more understandable tax system. So that said, we are continuing to evaluate the impact on classes and subclasses of property taxpayers of doing this. It is very challenging, again, to unroll that 50 years of shift without creating winners and losers. And so we're continuing to evaluate that. And again, appreciate you bringing this forward, and I'll reiterate what I said last week. I believe it is imperative that the legislature comes to a solution on property tax this session and pass it through. Thank you.
Tyler Rager, Americans for Prosperity, registered opposed to the bill, specifically for Division 10 and the automatic the gas tax increase. While we agree that we all want good roads, and that's simply certainly a core function of government, we just don't think an automatic tax increase is the way to go there, and we think all taxes should have an affirmative vote from the legislature.
Thank you. Chelsea Hoy, representing the Iowa League of Cities. We are registered as undecided. We appreciate the continued refinement to this legislation. There are several meaningful improvements in this version that are carryovers from last year that I'll start by briefly touching on. We appreciate moving the calculation of the budget adjustment factor to November rather than January. That change is necessary as it aligns to the budget factor when cities begin building their budgets in the fall. We recognize the effort to preserve growth and shared economic development goals by excluding new valuation from the revenue restrictions. And we appreciate the flexibility to increase local option sales tax to 1.5%, subject to voter approval, of course, which provides communities a tool to diversify revenue and reduce reliance on property taxes over time while keeping the taxpayer at the center of the conversation. We also appreciate the electronic delivery of the taxpayer notice. If we are modernizing distribution, I think this is a good opportunity to improve clarity as well. The League has advocated for clearer, more user-friendly tax notice formats, and we would encourage you to consider looking at the House's language in their bill that strengthens the content of the form alongside the digital delivery. We appreciate the inclusion of the budget adjustment factor that acknowledges inflationary pressures, but looking at the structure as drafted, over the past 30 years, only 4 years would have triggered growth above 2%. And 2 of those years occurred in the post-COVID range. City budgets are driven by wages, benefits, insurance, contracted services, and those costs continue to rise outside of local decision-making. If the intent is sustainable restraint, we believe the factor should closely track to actual costs that cities incur. The goal from us is not unlimited growth, it is alignment, ensuring that revenue policy reflects the cost of providing essential services that cities are required to deliver. Unlike a household budget, municipal budgets are largely driven by ongoing public safety staffing, infrastructure maintenance, contractual obligations, and state-imposed requirements. Those costs continue to rise regardless of economic cycles. Sustained restraint works best when allowable revenue growth is disciplined but realistic, so communities can maintain services that residents rely on. Our most significant concern is the senior full exemption for homeowners over 60 who have paid off their mortgage. While we understand the intent is to provide relief, a full exemption without a means test risks creating significant tax shifts and unintended housing market distortions, particularly in Iowa's rural communities with higher concentrations of older homeowners. We also have concerns because there is no reliable data set available to accurately calculate the fiscal impact of such a change across our communities. If the legislature wishes to provide a more targeted relief to seniors, we would strongly encourage an income-based approach rather than a blanket rule exemption. We recognize that this bill represents a comprehensive effort to reform the existing property tax system rather than modifying it. We appreciate the seriousness of that undertaking and stand ready to continue working with you as discussions move forward this session. Thank you, Mr. Chair.
Okay, real quick here, I correct you on one thing, I'll come back to some of your comments at the end, but, you listed some of the right things here. This bill does not cap tort liability, insurance, property, some of the things you listed, so it's really not a 2%, right? Which is why we call it a soft cap.
Sure.
As opposed to, I'm not trying to put words in your mouth, but as opposed to representing like everything needs to fit at 2% of the CPI, in reality, there is flexibility there, which is.
We're looking at the CGFL in this bill, yes, that is correct, accurate. Thank you.
Good afternoon, Craig Patterson, and I'm here representing a few clients. I'm just going to kind of go through a couple things here. First of all, very much appreciate this conversation. There's 3 big bills, within 10 days of the session starting, and there's a robust conversation. Really appreciate that. And I don't second guess the fact that you're hearing at the doors, property tax reform. One of your folks showed up at your Senate colleagues was at a PDI roundtable and pointed out to the folks in the room that you all largely, passed referendums around the state, but, so you guys have to thread the needle, and I have much respect for that. From PDI's standpoint, first of all, we 100% want to see property tax reform, something sustainable, predictable. There's a lot of things in this bill that we like. Following the direction of income tax reform, which was really a game changer when the legislature made that one single bracket. We don't believe TIF is standing in the way of property tax reform. Also, I just wanted to mention that to Kate, we're happy to work on that, even with the reduction in the school foundation levy. The CPI in this bill is a great step in the right direction. Provides more flexibility to reflect economic changes. Some of you probably saw an email from the Common Sense Institute this morning in your inboxes noting that home values rose at 3.7%. In Iowa in 2025, perfect example why the CPI makes more sense. We like the diversified revenues lost, the road use tax fund piece in there. Switching gears, one thing I would note for the Iowa Library Association is if there's any look at returning voter-approved levies into the discussion, we would entertain that. On behalf of public transit. The transit levy tied to CPI, we view that as better than the 2%, but bear in mind that that's their only levy, so flexibility is really key in there. Regional cooperation is really the model for service delivery, so we would just want to point that out. And then on behalf of Polk County, the CPI and the new valuation sections make this bill more workable than House File 718 and the hard caps and the other bills. So we do have some concerns about the changes in the bonding, but otherwise, thumbs up on the overall. So thank you.
Chair and members of the committee, thank you for the opportunity to speak. My name is Dan Langworthy, and 5 years ago I started buying and operating multifamily property. We're a small business with a team of just 4 and just under 100 units, but we take a lot of pride in the work we do. We purchase distressed multifamily housing, fix it, and provide a better and safer community for residents to live. I'm here to oppose this bill. For operators like me, it is a major tax hike and shock. Iowa's tax system has been what I have relied on when I bought properties, hired staff, and built budgets. This bill can translate into a 100% increase in taxes for me by year 2037, not adjusted for inflation. That kind of swing can put good operators like me underwater. And the impact doesn't just stop with owners. When taxes jump, rehab budgets get cut. That means affordable, older housing stock will not be preserved. It also makes it harder to justify new construction. And while I don't do new construction today is affordable workforce housing in the future. If we choke off development and reinvestment, we lock in affordability problems for the future. This does not just hurt owners, it hurts renters. Thank you.
Good afternoon, Senators. Matt Gromwald with Farm Bureau, and we're registered and undecided on this bill. Farm Bureau members for years have had many policy goals when it comes to property tax, and we appreciate this bill including many of those items. We support property tax growth limitations, less reliance on property taxes for education funding, using alternative revenue sources to reduce reliance on property taxes, which could be done with the local option sales tax. We support maintaining the ag productivity formula and rollback for ag assessed property. And we encourage a close examination of changes to property tax credits and exemptions. Mr. Chairman, Senators, we appreciate you making property tax reform a top priority this session and encourage an overall tax reform package to provide much needed relief. Thank you.
Good afternoon, Senators. Tom Koch here on behalf of several clients. Just want to hit 3 issues in the bill. First issue, on behalf of Casey's General Stores, we do have concerns, as have been expressed previously, about the change to the fuel tax that would put that on an index. We think that if the legislature wants to consider raising a tax, it should do that by voting each time on that. We think that's good tax policy and something that we think is appropriate on the fuel tax as it is with other items. Second of all, appreciate, and several of the items we talked about from a local government standpoint, do want to highlight some language on page 69 in section 101 of the bill dealing with the local option sales tax. And this is a change that is not the main focus of the local option sales tax, but would say that if you currently dedicate some of your local option sales tax to road construction and you want to amend your revenue purpose statement, you cannot reduce the amount that goes for road construction. We represent a city that would have some negative potential consequences. We believe that if the residents of their city vote to amend that revenue purpose statement, that they should have the flexibility to do so. So we have some concerns about, again, section 101 on page 69. And then the third issue, on behalf of Leading Age is a provider of independent living and other types of opportunities for senior citizens across the state of Iowa. We believe that there's a kind of an unintended consequence, and it was highlighted earlier in the discussion on the bill by the subcommittee chair about the interest in lowering the property tax impact for seniors. We're concerned that because there are, for seniors who are in independent living and are more like renters as opposed to homeowners, that they would face higher costs as a result of the changes in the rollback. And we will have some language that we'll be sharing with the members of the subcommittee later today that hopefully can address that. And we appreciate the members of the subcommittee's willingness to consider that. Thank you very much.
Thank you, members of the subcommittee. My name is Logan Murray. I am here on behalf of the Greater Iowa Apartment Association. First off, Senator Dawson, thank you for your time. You met with a few of our members this past year on kind of your vision on the rollback, and we appreciate your time for that. First of all, I'd like to say we're registered on the side on the bill. We're still trying to figure out the fiscal impacts on what it would do to multi-residential. We've been working closely with our friends from the Iowa Taxpayers Association. I would like to just let the committee know that depending on which methodology you use currently, Iowa either has the second to ninth lowest rents in the country. Usually it's averaged out around the 5th lowest rent in the country. So just as you're continuing to have this conversation regarding property taxes, we want to make sure that Iowa remains competitive, not just for our industry, but also for 30% of Iowans that rent within the state. Happy to answer any questions.
Lionel Brame with the County Engineers Association. Road funding is important. We appreciate the inclusion of the fuel tax indexing.
My name is Brian Moore, Executive Director of the County Engineer Service Bureau. I'm going to make a few comments through a little different lens today. Through the lens of roads and bridges. Okay. First of all, I've spent a 25-year career as a county engineer, designing, building, and maintaining the road network that everybody in this room uses. We've worked with our city colleagues, DOT colleagues, general contractors, local farm bureau, okay, to develop and maintain the network. And you'll notice I say the word network, okay? Question I have for everybody in the room. What's the most important road in the state of Iowa? It's the one with which you use. Okay? The general public, they don't know, nor really do they care, who owns or maintains the roads which they need to get from point A to point B. Okay, so road funding is very important. And last time I knew, we were still an ag state. Every piece of kernel of corn, soybeans, eggs, pigs, start on a gravel road, make their way to a paved 2-lane county road, go to a state 2-lane paved road, to the interstate, to the rivers, to the port, internationally. Okay, it is a network. So how does this network get funded? There's three pieces of three stools, three pieces, 2 buckets. Federal, road use gas tax, which is our state tax, and local property taxes. Okay, what's important to understand here is that the cities, counties, state DOT, they all use different portions of those 3 buckets. If one of those buckets don't hold up the stool, the network fails. Okay, so we're here to discuss the big one, property tax, but Senator Dawson, you also have in this bill, looking at the gas tax. Anything we can do to strengthen any one of these buckets to secure funding is a good thing for the entire network. Specifically in this bill, I will throw out a number. Everybody likes to throw out numbers. 4 counties to go to the road departments. If you just look at the rural taxes, the rural basic funds that have come to the roads over the last 10 years, it's been a 3.3% increase of funds actually spent. Senator Dawson, I commend you last week for making the comment, 2%. Is that the right number? How was that derived? Okay, so I hope everybody considers what the limits are. We understand that, but use data to consider that. Another couple quick things I'd like to address. Section 8 of the bill talks about how funds are sent to the road departments. Right now it's based on a fixed levy, and you calculate the dollar amount. Currently, we set a maximum amount. There's a 75% minimum that the counties must meet, which is important because every local board of supervisor needs to contribute to the network. Okay, you need to contribute. 98 counties shouldn't supplement 1. So we need that minimum effort. In the current bill, we've changed those levy amounts and we change to a different percentage. 51%, I believe the way it's worded. 51% of what? That's the question I have. All 3 bills, we understand that there's probably going to be parts of each bill. All 3 bills, you talk about exemptions, different classes, this, that, and the other. My question is 51% of what? We want to work with you to provide a number so that we can still sustain that 3rd leg of that stool for road funding. So looking forward to work with you as we work through the bill. Thank you.
Curtis Bauer, the mayor of Roland. I'm currently registered in opposition of the bill. I struggled with declaring what way I was going to declare for a number of reasons, but it essentially came down to what the bill did. So utilities should be a factor in consideration to provide relief to our constituents and to our citizens. While balancing the needs of the many, we're left with the burden that places on the few. In cities across Iowa, especially smaller rural towns where the Republican voter base does exist, services are getting cut and being considered for being cut. Recently, Eldora's mayor recently suggested cutting EMS in a local budget meeting, and that stirred quite the hoopla. The majority of the shortfalls are the prolonged product of many failures across many facets of our government. Deferred maintenance is one, poor choices, going with the smaller Band-Aid fix. Inherently, if we put a cap on revenue, whether it be a hard cap or a soft cap, this would inherently push the cities to start borrowing more. And when you borrow more, you spend more in interest. One of the other things I did discover is while Iowa does have somewhere between the 8th and the 12th place in the nation for being one of the highest property taxes in the nation, one of the facets I found was corporate and residential was higher, but our ag was a lot lower. And because we're an ag state, we want our ag to be lower because here's the funny part. The funny part is we're using that to bring in revenue, the product, the commodity that derives from that. But one of the other things I did find was Hawaii is first in the nation for having the lowest property taxes, but it has the highest tourism, which means that they pull in their money from different tax sources, and they have a tourism transient source of income. Nevada, tourism and gambling. And then Alabama uses fines and fees. Reliance on state and federal funds, heavy reliance, is also factored into those states. That's why their property taxes are so doggone low. Our constituents don't come to these budget workshop meetings. They're not complaining to me. They're not complaining to the city council. They're not complaining at board of supervisor meetings, but they come, and as you guys door knock, they're saying property taxes are too high. But they never show up to the city council meetings to voice those complaints. So how are we at this level supposed to be able to address any of their concerns or even show them what is in the budget if they don't come and see us first? The state's expenditures last year increased by 5%, but inherently you want to cap us at 2%. Doesn't seem hardly responsible, doesn't seem fair. And the 65 years and older own the greatest majority of property, holding the greatest amount of value in the state. That inherently shifts that financial burden to our younger residents, our younger citizens, the lower and middle class. That doesn't compute for me. I'm open to a lot of suggestions. I just hope that we could shift this a little bit differently than where it's at. Thank you.
Good afternoon, Senators. I'm Erin Hockman here with DART, Des Moines Area Regional Transit Authority. And I really want to start by thanking Senator Dawson and his staff for this very thorough and thoughtful process and all the time you've spent on this proposed legislation, and especially the time you've spent with us at DART, understanding how it impacts regional transit districts. We know we're a pretty small piece of a really big, complex puzzle, but appreciate the time you have spent with us on it. We also want to thank you for the changes you have incorporated based on our feedback to date. We did share a brief letter yesterday with just a few additional adjustments that we are requesting, basically to ensure that regional transit districts are treated similarly to municipal transit systems as well as cities and counties in any final proposed legislation. So again, our sincere thanks for the time and the ability to participate in this process.
Thank you, Mr. Chair. David Edelman with the Metropolitan Coalition of 9 largest cities. Want to thank you for including the CPI with the cap that excludes a number of different levies in it, unique to this bill as opposed to the others, including the new valuation language as well. I know we're continuing to kind of dabble with that. As Chelsea said, the electronic delivery notice, and then also the diversification of funds loss in the gas indexing, we appreciate. Also, it's really the only bill that addresses former House File 718. Our concern, again, as we reiterated, is the unknown impact with the 6-year-old provision, but continue to work with you on that. Thank you.
Good afternoon, J.D. Davis with the Iowa Association of Business and Industry. We are registered undecided on this bill as we are on the other 2 versions. Don't want that to be mistaken for not supporting the effort that you're undergoing throughout this session and last session on meaningful property tax reform. Mr. Chairman, you let out with the fact that the state of Iowa was only had about 9 competitors that weren't doing as well on property taxes. If you're to look at what our group represents, which is primarily commercial industrial payers, we don't even fare that well. reform while watching for any shifts between property classes to make sure that the effort works. And you'll remember, Mr. Chairman, we met with you and we said that we can recognize clearly that there are flaws in the current system, and we're going to come with another system to replace that. There will be flaws, and we prefer to be working on new problems rather than old problems, so appreciate that. Thank you.
Scott Newhart, Associate General Contractors of Iowa. Thank you for including the provision to address the health of the road fund in this bill. I'd like to remind those in attendance today, the local governments get 52.5% of all the road funds. So I have to go back with a little history. Going back to 1999 is kind of the year, or 97 rather, is the year DOT was established as the optimum year in terms of revenues received and buying power of projects. That was kind of, as I say, the optimum year. Since that time, in the ensuing 29 years, that buying power, according to DOT, has diminished by 50%. And that takes in the fact that we, in time 21 in 2008, raised a significant amount of money in the road fund then, as well as, of course, the gas tax, the 10-cent gas tax in 2015. What DOT would add is of that 50%, 32% of it was lost just between the time we passed the gas tax and today. The provisions of the bill is referred to as gas tax indexing, which has been adopted by half of the states in various forms. Not all of them do the form that you find in your bill. It would allow for an administrative adjustment of the gas tax. I'll explain how that works. But first I want to tell you, gas tax isn't the only source of revenue to the road fund. Your license plate is one source. Your 5% you pay on fee for purchase, new purchase, or new registration on a dual use vehicle is another source. Those two sources are dynamic funding. And I'm the first to admit, since we did the gas tax in 2015, those sources of revenue have risen over 30%. 30% more today in revenue than back then. Why is that? Those fees are based on the value of the purchase of a vehicle. Those prices go up, so you do have a dynamic source. The gas tax, however, going back to 2015, has risen in terms of revenues today compared to then, 1.8%. Why is that? A lot of it, according to DOT, has to do with fuel efficiency, which is a good thing, but the vehicle is still consuming the roadway. So, as I say, there's three main sources of revenue to the road fund. But let me explain the process of how this indexing would actually work. Under the bill, the Department of Revenue is responsible for determining the previous year's consumer price index. The consumer price index is the trigger for an increase. Now let's say this had been in effect a year ago. Now let's say that the consumer price index that the Department of Revenue would have had to report to you in January 2025. It would have justified and triggered a 0.6 of 1 cent gas tax increase effective July 1st of 2025. There are several steps, there are a couple steps between it taking effect and then announcing it to you. One of them is they have to report to you by January. You would have, as a body, until April 30th to decide if you want to disprove this. If you don't disprove it, the Department of Revenue has those 2 months then to put it into action and following July 1st. So those are basically how it would work, and it can never, there are several backstops to it. It never can raise more than a penny at a time. It has legislative oversight. It can go up in tenths of a cent, but not more than a penny. And the final thing is it has a circuit breaker in it. It says if it rises 3 years in a row, it must pause for at least a year. So with those provisions in the bill that you've chosen to put in the bill, I think you've provided both answers to those who say, well, it's just always automatic. You always will be seeing what this is and can act. At the same time, I think the reason it's probably in the bill is you have recognized there's been a big loss of buying power for the cities, counties, and the state. Thank you.
Good afternoon, Lucas Lincoln with the Iowa State Association of Counties and the Iowa State Association of County Supervisors, both registered undecided. Of the 3 property tax proposals being considered, this would be our members' preference for how to move forward, the approach to take. As I mentioned last week, the growing frustration with limitations, stacked upon limitations in a system that is not really working. So we're cautiously optimistic about just starting over and having a jurisdiction by jurisdiction level limitation. And then you just have one limitation, you can move forward. I think county supervisors getting information from their assessor and starting to look at things earlier and look at multiple years would be beneficial for their operations and the taxpayer. Plenty to work on with this bill, but we think of the 3, this is probably the approach, and look forward to continuing to work on it.
Good afternoon, Abigail Moss, County Supervisor. I am also a business owner and a farmer, so I represent a lot of the Iowans here today. I am also the supervisor for Iowa County, which is middle of the road population, so I get to see what it's like for the everyday Iowan. And I've had the privilege of helping other county supervisors from across our state, so I've gotten to see how every county operates, whether they're big or small, so I feel like I have a really broad perspective of how local government works. I will say 718 has been the biggest complaint between cities and counties. I do support what the intent was there, but it's obviously squeezed things a little tight. And I think the biggest issue that a lot of us identify is that in the last 10 years, property taxes have increased $2.5 billion, sorry. And of that, the schools were 38% and they were untouched with 718. So I think there's a lot of frustration that we were the ones that were mostly targeted. And there's other entities out there in the state that are spending money as well. Mind you, community colleges in that 10-year time frame also increased their property taxes by 89%. And here, the cities and counties kind of got the most of the heat. I like this bill because of the predictability when it comes to budgeting. Getting rid of that rollback, as Lucas said, helps with future budgets as well. And I've always maintained, why do we pay $79 million across our state to have local assessors just to have the state tell us what we're actually gonna do for valuations? And in Iowa County, they've gone up. And why should I have to compete with Polk County, Dallas County, Johnson County? And so I think that getting rid of that, the rollback is a great thing. The gas tax inflator, I also support as well. Just so everyone knows, the cities and counties manage 11 times the miles of road that the state does. And so a lot of us, when it came to property tax relief, we either had to cut or maintain what we've been giving to secondary roads. I know in my county, we maintained the same amount for the last 11 years, regardless of 718. But the problem is then that's less gravel for our local roads. So this is a great opportunity to maintain the roads and bridges that we currently have. Just as a general comment, as Curtis, as you said earlier, I also have the same question. Nobody shows up to my budget meetings. The last one I had complaints about stray cats and wanting an ordinance. But the problem is that it takes a PhD to understand the property tax system as it is today. And that's why we need to simplify it, and that's what this bill does. It takes a PhD and a full-time job, because for someone to chase down their school, their city, their community college, their county budgets, go to all the meetings, figure out what's going on, that's a full-time job. And who do you know? Who's the bad actor? We don't know. So that's why I think the state has gotten involved, and that's why I commend them for doing so. And the last thing I will say is, as a county supervisor and as somebody that's traveled across our state, I think that people are frustrated with taxes as far as property taxes, but they also want services. I know we all want good roads and bridges. We all want law enforcement. We don't want to travel 3 counties away to go get your driver's license, right? The problem is the notion that you don't actually own your home if you can't pay your property taxes. People take a lot of pride when they buy their first home. They take a lot of pride when they pay it off. And it's a looming threat over their head if they're on a fixed income like Social Security, that if I can't pay my property taxes, the government can take it. And so that's why I really support this bill as well, because that's what I've seen as boots on the ground talking to the average taxpayers in our state. Lastly, I will just say, the mailer part going online is great. I think the statewide G was at 800,000 that was spent, something like that. 800,000 was spent last year on a mailer that was confusing at best. I have better words for that, I'll save for another time. But I just thought that it's great to go online to save the taxpayer dollars. And lastly, the bill isn't perfect, obviously needs a little fine tuning, but I've never seen a perfect bill come out of this building, so I think we can all agree on that one.
Good afternoon, my name is Laura Book and I'm with the Greater Des Moines Partnership. We are registered undecided on this bill and would like to direct our comments towards Division 1 and 9. The partnership supports a streamlined pro-growth tax environment that encourages business and nonprofit growth. Specifically, we support the budget adjustment factor based on CPI in Division 1 versus a hard 2% cap. As an organization comprised of both private business and local communities, we appreciate this provision because it strikes a balanced approach for our investors and members. A CPI mechanism provides flexibility to respond to economic conditions while still supporting a streamlined tax environment. Additionally, the partnership supports Division 9 and the option to increase the local option sales tax from 1 to 1.5%. We appreciate this proposal providing local governments with tools to diversify revenue streams. This helps maintain a balanced tax structure to support investments in infrastructure and quality life amenities that attract business and workers. Overall, the partnership supports a pro-growth tax environment that encourages investments in public infrastructure, workforce attracting amenities, and sustainable government services. We appreciate the provisions of this bill that support these goals. Thank you for your consideration. We look forward to the continued conversation. Thank you.
Margaret Buckton with the Urban Education Network, Rural School Advocates of Iowa, both are registered undecided. Mostly undecided because, like all Iowans, we haven't seen numbers on the impact on this. And when you move all three big components of the property tax system, you're changing valuations, you're changing rates, and you're changing the levy. And when you change all those things together, no one taxpayer knows the impact it's going to have on them. Simplification is great, but without transparency, I think that will be at a loss to explain what happened. Like Mr. Newhart, I've been here for more than 30 years, and I remember 30 years ago, we had 30% of school funding coming from the state and 70% coming from local property taxpayers. That's completely flipped because you use the formula to deliver property tax relief every single year. You just did it in Senate File 2201. There was more money for property tax relief in there than there was for students. And we're already budget limited based on enrollment times the cost per pupil that this legislature sets. So we appreciate some of the little things in here, the hold harmless for school districts that are obligated against those levies that this bill would reduce immediately. We're curious about how that reduction in levy rate happens right away, but the build back of the valuation takes 12 years. So immediately up front, there's going to be a huge crunch on those voter-approved levies that are for things like school safety and cybersecurity and buses and technology-ready facilities that are designed for student learning. So we appreciate the conversation. This is probably our least favorite of the three bills, but we're registered undecided on all of them. I think that there is some consensus to be made in all the proposals that are there. The very last thing I would mention is on the management fund. There's a study in there that will depend on school funding experts and the school budget review committee to make a recommendation on thresholds and what's an appropriate balance. We think that should predate any policy that sets those thresholds into code. So we want that to take out the policy that says no more than 180% and you can levy, and have the study happen first and come back with recommendations. Thank you very much.
Brian Tack, I work in the Polk County Assessor's Office. I'm here for the State Association of Assessors today. And this is our favorite bill of the three, sorry. In Division 1, we would like to see the CPI tiers be applicable to all taxing authorities, even those of us in small offices that make up a minuscule amount of the property tax collection. Inflation affects us the same. And then in Division 2, we're in favor of the additional language regarding evaluation that has been put forward in front of you already. But we think that adds a lot of clarity and are in favor of that. Thank you.
Hi, Senator Jim O'Bradovich, Jefferson Fink, here on behalf of the Iowa Public Airports Association. And we'd like for you to consider, and I probably have heard from some of our member airports, to actually have all the fuels included in the indexing of the fuels. Right now it deals with mostly motor. We'd also like you to put the aviation fuels in there also in that indexing, so thank you.
Cindy Peterson here representing Police and Fire, and first of all, I would like to thank you for tackling such a huge topic. Your passion and dedication to this is muchly appreciated. I would just ask, we're hearing from around the state that with this overhaul of taxes that there's going to be some cuts happening, and we would just ask if there to be any kind of guardrails to protect public safety in our small communities, because they're at a fear of being cut and eliminated and what have you. But any opportunity to try to protect police and fire would be great. Thank you.
My name is Frank Levy. I'm CEO of Newberry Living. We manage 4,500 apartments in the state, of which I own some. I'm surprised that there's no other apartment owners apart from Dan Langworthy, my friend, speaking out. Especially surprised there's no lenders speaking out, because property taxes is usually the single biggest line item in the operating budget. In the first year of this bill, our property taxes would increase by 50%. We believe that the first thing we would likely have to do after this bill passes is meet with our bankers, because some of our properties would be underwater or unable to make debt service payments. As a result, we would foresee significant foreclosures in our industry across the state. So a 50% increase in your single biggest line item is what this bill reads like to me, and then that line item would keep growing for 10 years after that. Thank you for the time.
I'm Dan Serp, I'm a supervisor in Clinton County. Appreciate the comments from the mayor and my peers with the counties over here. I would like to provide some comment about a little bit of concern about sustainability for the long term of the 2% cap. 718 has really caused us all to embrace, some really awesome changes, and I support a lot of the reductions that we've made and the affordability we're trying to earn back for our taxpayers. In Clinton County, the first time we went over the 350 cap was in 2016, and we did that because we, rather than a head tax to operate our landfill, we decided to pay for it out of our general fund, and we embraced going over 350 as a partnership with our municipalities in Clinton County, and it became a great success, really. It enhanced collaboration and cooperation and helped us keep our operational costs down, and really everybody considers it's a win. But now in order to maintain that system, we're really being constrained and trying to figure out how to get back under that 350. We're optimistic we're gonna be able to get there. My problem is that as much as we all absolutely want to continue to support public safety, cost of law enforcement keeps escalating far greater than 2% a year. The cost of the labor in all of our negotiations, we've never realized anything at 2% or less. Everything's been over than that. And we know that, in order to have good people and give them the equipment that they need and provide the training and the resources, it costs money. Another concern for us is, we talk about the roads, and I appreciate the plan for the roads maintenance. The dime conversation kind of originated with us and Edith Pepper in Clinton County about 2010, 2008. And so we were real excited to see that passed. I think that the multiplier and the breaks and the provisions that are there are appropriate. I appreciate that. I am concerned about 2% and the sustainability as we see the costs that our business and our budget meetings escalating greater than 2%. Our software contracts, our cost of labor, all of it. And so I think at the end of the day, we've all understand and realized and kind of embracing that in the long term it's going to equate a reduction in services. And I just hope that that's embraced by the leadership that's making the decision and understands that if we're constrained and have to explain to our constituents why we're reducing services, there's only so many places we can point, and some of it might be these decisions. So I just hope that there's accountability on it the same way that you asked us to be accountable for our dollars. Thank you.
Brittany Lumley here on behalf of Ownwell. We are registered undecided on the bill. I know we spoke last week about the burden of proof shifting from the taxpayer over to a local entity, and so we are looking forward to working with you on that. Since that's not in this bill, we would like to make that addition down the line, and so that's why we are undecided, and would appreciate you considering it. Thank you.
Ashley Nathan, looks like you're up.
Hello?
Yep, we can hear you.
Thank you. Yeah, I'd just kind of like to add, I'm a property owner out of Iowa City area, Johnson County. And just kind of piggyback off of Frank with Newberry's comments as far as property owners. I'm also a part of the Iowa City, Greater Iowa City Area Apartment Association. And we are opposed to the bill, just as sort of all the points noted by Frank. We're concerned that it essentially will lead to tenants, rent rates are just gonna go up. And from the apartment standpoint, and with Iowa having a pretty low, or a shortage on affordable housing, we're concerned it's gonna kind of blockade future development, rehab, and just, affordable housing for tenants, so.
Thank you. Mayor Kavanaugh, you're up next.
All right, thank you, Mr. Chair and Senators. Appreciate this time again to be able to meet with you and talk about this bill. As I mentioned in previous testimony, the challenge and the opportunity for us in this discussion of property taxes really comes down to achieving this balanced approach that the taxpayers are demanding of us. The taxpayers in Dubuque and throughout Iowa, they want lower taxes. We've heard that clearly. But those same taxpayers are asking us on the local level for a return on their tax investment with services and improvements in our city here in Dubuque that they need and desire. So I want to start mostly with and I'm going to spend most of my time on appreciations actually on this because I just feel the need to point out that several aspects of this bill really indicate that you, Senator Dawson, and all of you as members of the committee have really genuinely listened to the concerns of city leaders that we brought to you, and you're working to strike this balance, like I just mentioned. So I really appreciate that. Some specifics. I appreciate the CPI provision that's related to revenue growth. There are very real costs for city services, and those real costs do shift over time. And as we've heard from many of the speakers here today, those costs have tended to increase. This bill also provides an incentive for economic growth, excluding new valuation from revenue restrictions. We appreciate that. We also appreciate the very real attempt to simplify the property tax system with real structural changes. I think this is a great benefit to taxpayers and really everyone who has to deal with the property tax system and talk about it. I do think it'll increase these types of changes could actually improve public participation in this process, and I appreciate that. Also appreciate the proposed increase for local option sales tax with voter approval. Also appreciate applying the CPI to gas tax has been mentioned before. And then finally, the taxpayer notices, I think we're going to see a great improvement in this bill and reach taxpayers more easily, so I really appreciate it. But one consideration I want to mention today as a potential concern is the impacts of exempting the residents over 65. As has been mentioned, I think income-based exemption would likely be a better option for our residents. So I hope that we can carefully consider that as we move forward and keep that conversation going. So thank you very much for the time today.
Thanks, Brad. Seeing as no one else, going once, going twice. Okay. Who wants to go first? Winckler or Schultz? Schultz, go ahead.
I'd like to say, because I was kind of glad to hear a few people pipe in one way or the other. It's my favorite bill too. Of the three, this is the one that creates a new framework, that sets up a new generation or two, maybe three, of property tax valuation and taxation that I really appreciate. One of the, I didn't hear any new concerns that we had. I'm glad to see you pull that off there. I'm gonna let, I was wondering if I could visit a little after you introduce that. If I could have a few more minutes. I really appreciated the one of the things that I've been watching and noticing is we are monitoring, but we have concerns. I appreciate that there's a little bit of a different, today it was we're monitoring, we heard some positives and we heard some concerns, because there's otherwise a general concern, there is an issue that I have, that are you for the bill or not, so we know what direction people are lining up. I appreciate that. This holistic approach is what I've been waiting for and looking for. I'd like to visit a little bit after you talk about the display up there. I appreciated hearing from multi-residential owners on their concerns, and I have kind of a history I'd like to talk about after you introduce that. Senator Driscoll.
Thank you. I just wanted to say, I wanted to thank everybody for coming today and putting their input in. I've been a part of the subcommittee for the last couple of years and very grateful to be a part of this conversation, because I know that this is such a big issue on islands, on all islands. So I'm excited to hear what Senator Dawson has to say, and I think that I'm like Senator Schultz. This is definitely, out of the 3 bills in the building, this is by far the best one in my opinion, and excited to move it forward today.
Thank you, Mr. Chair. I appreciate the comments as well and the time that everyone has taken to look at the bills. One of the things that I struggle with is certainly there's a lot of moving parts in this bill, but the question that I still have is then what? When this is put into place, what does that mean for the residents and their ability to still receive services, as well as have any kind of predictability or sustainability to their life? And I think that is something that still concerns me. I do think that the exemption should be income-based rather than age-based. I think that there are ways that deferrals, as an example, could occur according to individuals that are low income. When they sell their property, that could then go back into a fund that helps fund those deferrals. That hasn't necessarily been talked about, but it is something that other states do. And I think we need to learn from other states as well. I do have kind of a different opinion in regard to the multi-residential. I know that costs will go up, but so will rent. So will affordability. The affordability will go down as a result of that. And so I think we need to look at the fiscal impact on families and their ability to continue to rent the very same apartment that they've been in as a result of that. I am concerned, if I've read the bill correctly, by 28, fiscal year 28, 100% of school funding will be state funded, and that definitely concerns me because the property tax does provide some predictability and sustainability. If we look at potentially where the largest increases have been, some of it has been in the school funding, and part of that has been because of the low funding that they have received from the state. There are some safeguards in the process that allow them to then go to the taxpayer, and I would mention that right now we have statewide about $200 million in unfunded special ed costs that then are placed on property taxes across the state. That doesn't mean we stop that. It just means we recognize that. And when schools are not receiving the adequate funding, the property taxes can, in certain situations, be increased. And when we then take on 100% of school funding, that means that they will be spending maybe more, but the per pupil allocation will be less because we don't have a balance of the 540 levy or the levy that is being proposed initially in this bill. So there's still some things that it's more the fiscal impact and the what does that mean for the health of our cities and counties and school districts as a result of the bill. And I'm willing to dig into that some more, but those are questions that I have. Thank you.
Thank you, Mr. Chair. I'm going to frame back where I have come from before and what I'd like to see protected with the property tax bill. One is senior protection. That's the saddest situation of all. As I hear the business and industry complain, they're making exorbitant profits in most cases. And I understand that you got stockholders and that you want to make more, but the seniors have nowhere to go. They have nowhere to go. And I actually served, I don't know, in the 90s when interest rates on savings was very high. And so who took advantage of that? Not the seniors, investors, property investors. And so they didn't pay their property tax because it was easier to not pay your property tax and invest the money and maybe wait 6 months, 8 months, a year. And so the legislature decided they were going to put a penalty. And so they put the penalty, and now maybe some of you know, is if you don't pay your property tax, you pay 2% delinquency a month. And what it's done is it's created an industry for outsiders to come in and buy up property taxes for delinquency. And I, as a poor taxpayer, the elderly, the people on fixed income, if they're delinquent for a year, have to pay 24% to buy back their own house. Or they lose it to the investor who came in from California. And so, that was done because interest rates were high. They weren't at 0.5% or 1%, but we've done nothing to lower that or to scale that for people that aren't paying their property taxes because they can't afford to, rather than investing the amount and coming out better. So that's one issue that's been grinding for 30 years. It's time to address that part in this bill. Tax-exempt properties. Again, I said it in the last subcommittee. Tax-exempt properties in the city of Des Moines, 40% are tax-exempt. And so when I hear the partnership talking about encouraging expansion of tax-exempt properties, charitable organizations, that's great. But again, then we lose. The state complex is tax-exempt. I can understand the Capitol, but every building out here, as we expand, the Utilities Board, the Supreme Court building, those are all tax-exempt. But yet we have to provide emergency services. That should be addressed. That at least the city ought to be able to charge for emergency response. Because by God, you want it when it happens. I don't care what tax-exempt charitable organization you are. The ambulance shows up at the state capitol and any other tax-exempt building. There's not a checklist that says they don't pay property tax. Gas tax, my gas went up 40 cents in the last few days. Okay, beyond our control. But 40 cents, we're here complaining about indexing gas so we can have good quality roads. I don't understand the gas argument by anybody, because it's one thing that jumps from a penny to 50 cents in a day. And what do we do about it? Nothing. We don't do anything. And I can tell you gas tax or gas costs are going to be exorbitant for the next few months or longer. Who's doing anything about it? We can't. But we need roads. We need roads for the farms to bring product where it needs to go. We need roads for emergency services. So we have, emergency services in a fire or an illness. We need it for school buses. We need it for all kinds of things. So that issue alone, shameful that anybody would oppose that, to index that. Public transportation is a priority to me. This is a large community. The poorest people in this community are the ones that depend on public transportation. And they need it at night. You know, when people criticize, and I see buses running at night with only 2 or 3 people on them, those 2 or 3 people, that's how they get to work. And that's how they pay taxes. Maybe property taxes, maybe in apartments. So we need good public transportation in our communities. We need the outlying communities to pay their fair share and stay connected, not pull out. County hospitals, very important in this community. County hospitals, that's where people go when they don't have any insurance. And you know, our county hospital is one of the finest hospitals in this community. And so, you know, those are some of the basics. The idea that the federal courthouse could come in Des Moines, Iowa, and buy the nicest piece of property on the river and put a courthouse there that takes it off the tax rolls. Why? They can just do it, and they did it. And so, there's a lot of things that need to be looked at in our property taxes, but tax-exempt property really needs to be looked at. Maybe it ought to all be put into a pot in Polk County and then spread out per capita. Because you know what? The people in the nice growing suburbs out there still have to come to Des Moines to work and to recreate, but there's no cost to them. Des Moines pays it. The Des Moines taxpayer, where the poor people live. You know, you don't have the same situation in Ankeny and in West Des Moines and in Altoona. We have it here, old housing stock, older people, poorer people. But they're paying for all the amenities of the entire Polk County and surrounding counties who come here to recreate. People that talk about local option. Yeah, give local option. Why do you like local option? Because it's regressive. So the people that are making money pay less. So when I hear people talk about that, and especially the Farm Bureau, who, you get a lot of tax exemptions for the farms. The people in the city don't. But yet you're ready for another local option that you're not gonna pay, that we're gonna pay. And so, you know, when you gotta like split up and really become tribal when it comes to taxes, well, you gotta be tribal. Because I don't see anybody pitching in to help Des Moines with all the trouble it has with this tax exemption and its cheaper housing stock, older housing stock, senior citizens. Be thinking along those levels of how to make this tax bill fairer. You know, we radically cut income tax, state income tax here. I didn't see anybody in this room complaining about it. It was all nice. Well, we cut it a little fast and we cut it a little sharp. And now the state's in trouble. So we need to capture money from somewhere. Where are we going to get it? I don't know. We're going to have to figure it out. But those are the things that a big ball I represent in this community. The largest city in this state that provides the best of things for this state. Think of those things before you think of self-greed and you think of your businesses and your corporations. Think of the people that are suffering for your benefit. I got people in my district that are paying for these tax-exempted amenities that can't afford to go buy a ticket to go. How do you think they feel? Well, they can't afford to go to the park. They can't afford to go to the principal ballpark and take their kids. But they pay for it because it's a park. Wells Fargo Arena, Mel Casey Center. They can't afford most tickets for that. But people come from all over central Iowa to go there because they got money. The seniors and the poor people can't afford to even attend what they're paying for in property tax. So the greed sometimes really gets a little overwhelming when you sit where I sit, representing the people that I represent. So When I look at county hospitals, I look at public transportation, I look at the 2% that they pay if they can't, or they're delinquent on their taxes. And then I got people that are here worried about gas tax, worried about they want local option tax, you know. Well, you can't cherry pick taxes. That's what Senator Dawson's hopefully is gonna stop. You don't cherry pick, you're gonna pay your fair share. And the right people are gonna pay. And we're trying to protect the people that can't pay. That's what I appreciate about Senator Dawson. He knows that. Thank you, sir.
That's segue. Listen, property taxes are hard, right? We have 3,458 taxing jurisdictions in this state. And if the simple idea presented itself, it would have been done years ago, right? This bill isn't a property tax relief bill. This is a total overhaul. The attempt is how local government funds its services. Because the reality, unless we're willing to take a leap, unless we're willing to go deeper, we're still going to be hanging out 10 times in the United States. Guaranteed you, that won't change. I'm going to come around and hit a few points here a little bit, right? And this just illustrates how tough this is. And I do appreciate, certainly now we've had some good conversations over the interim of the last year to develop this thing out through it, right? A lot of colleagues there. But what were the complaints we heard about last year, right? How do you fund service, provide service? We heard a lot about roads and everything, right? Why do we go to, we talk about re-engineering how local government funds itself. If we're going to lean back our reliance on property tax, we have to diversify these revenue sources, right? So we go to gas tax. That's a constitutionally protected fund. That's the one thing I can promise Iowans, that every dollar that goes up, it goes back into the roads. Some of these other things I can't promise. It might go to some ridiculous program that will open up, someday, or pay for a soccer stadium here in the state or something like that with other revenues here. But this, I can promise Iowans, will make better roads, right? But back to why taxes are hard and reform is hard. I'm not going to pick on here, but just an example, right? And I understand your organization has a national policy against indexing, right? I totally respect that there. But here we are trying to provide a bill to the state to say, like, if you pay off your house, or once you own your house, you get to actually own it. And we ignore that whole thing of eliminating a property tax. But we come back to the association position, I have to be against the bill because of this. Which is really indicative of the problem of this whole building here, right? Over my 10 years now, the only way we're going to get this done, and I hate to be aggressive on this, but it's to plow through this building. Because the nature of everyone's associations, the nature of the lobbying up here is to do nothing. And I say that, I'm trying to work with everyone. But at some point in time, there's going to have to come a point where it's like, are we going to work for Iowans? Or are we going to work for the basement and work for second floor? Because just as you heard today, and at subcommittee last week, which is why we're trying to do more lengthy subcommittees, the gravity of this building is to do nothing. And that's not what we were elected here for, to do nothing. One more thing, since this wasn't brought up here, but just to, as was stated earlier on, I'm going to go over to something else in just a minute on the gas tax. There are guardrails put here, right? This isn't, as it had been represented, just going up forever. Right? That's intellectually dishonest as to what's in the bill. And then to turn around and say, well, just pull the provision out and just take a vote on it individually. How do we re-engineer local government funding, but then work on all the pay-fors first and then come back to say what we have left over, right? That's the point of the bill. It's a holistic reform. It's not to pull something out. And then to take an affirmative vote every year, I would have to say this. We have 327 school districts in the state, and as I know it up here, SSA has always been very non-political and a very easy vote to go through every year. I don't know how adding 947 cities and 99 counties to the mix and taking a vote on that every year on their local funding is going to make things less political, let alone less predictable, which is what the point of the bill is try to provide some predictability here for how we fund local government. Okay, moving on. The principle of this bill is to have property you own for your family and property you own for income. And that's the tax policy we're trying to achieve here, right? We never started this off by saying, oh, we want to do a 5% across the board cut. Or we just want to do this or do that. We're trying to rebuild the whole system. And as was indicated earlier on, it's tough to rebuild the whole system. Like, no one's got a bullseye on their back. But we do have a lot of legislative history around here to show us what has worked and what hasn't worked, right? When we have all these entities and associations fighting for their own piece in this building, which is what our code pretty much is, and it's been a culmination of effective association lobbying for the last 40 years, this is the system that we have, right? But I want to talk about, for a minute, just how unfair this system is. I want to talk about what was done to the 2013 property tax bill and talk about that. When we have created a tax environment, not all the state, at the federal level too, where it is more advantageous to own a rental property than it is to own your family home. In many cases, you pull down federal credits, you pull down state credits, you might be getting some HUD funding. Once you separate all that, if it's going to be a new development, you probably got some TIF as well too. Then once the building goes up, or then once you buy the building, you start to depreciate it. Right? You business expense your property taxes, you business expense your insurance. If you need a new roof, you expense that. If you got to buy a new stove or microwave, you expense that. All those things I just said, does a family get that opportunity here in the state? No. If a family needs a new roof, they got to come up with the money to pay for it, either out of their pocket or take a mortgage out. If the stove goes out, they got to come up with that money as well too. And then to give corporation the same property tax rate as a family home, when they have all the other tax advantages I just went through, is horrible tax policy. If we want a state where families come to live, raise families, retire, grow a business, we need people to plant their roots and actually own a home. Not create a tax environment through property taxes where it's harder for a family to own a home than it is for someone to rent it out. You said you wanted, I'll pause here real quick, Jason, I'm gonna come back here.
Oh crap, that was time. You caught me by surprise.
No, I'm just trying, before I get my, go ahead.
I stammered a little bit, you caught me by surprise calling on me the first time, and I didn't know to take your thunder here. So I just stammered until Dan just, here's where I'm gonna surprise a whole lot of people. Senator Winckler,
Yes.
we were together in the House in 2013.
Yes.
I'm gonna shock you here a little bit. Back in 2013, we did the big property tax reform, and I got fooled. I made a mistake. I was told that as part of that property tax reform, we were going to take multi-res commercial property, we were going to classify it as residential, lower the taxes, that's going to lower the rents, that's going to help people who are living in those places, and the tax cuts were going to benefit everybody. I am actually embarrassed to say I went back. Yeah, you're smiling. You remember this as well as I do.
I do.
And you told us so. And I went back to our forums and I said, folks, these will be stretched out. These will be extended down and lower rents. Competition will drive down rent because people are going to be looking for renters. And I learned within a few years that wasn't gonna happen. I made a lot of mistakes in the House, and I actually hold that as my #1 policy in the state, that I believed it, and not only that, I went home and parroted it to, at the time, I think it was House District 18. I forget now. It was wrong, it wasn't. I learned that way back then, but then when Senator Dawson had this built up, it really put it in cold hard numbers that we got led down a road. And I love profit, I love capitalism, I love investment and return on investment. But thank you. But what we did there was not what we told people was gonna happen. And we were fooled. At least rank and file were fooled. I actually regret that we've had 13 years now of folks living under a new set of rules, making investment, like this gentleman here, and now he all of a sudden finds the rules being changed. And that bothers me. I did not like hearing what you had to say, because you're right, the rules are changing here. And yet at the same time, among the philosophies that this bill addresses is there is a difference between property that you own to shelter your family and property that you own to make an income and pay for your family shelter and food and cars and college and all that. And I believe, as ugly as it is to say after hearing your painful situation, is the right thing to do. I have to back that up. That's the first philosophy part, is what property are we taxing because you are sheltering your family, and what property are you taxing because it makes you money? The other philosophy that I can't back off of is the idea that in America you should have the opportunity to own your property and nobody can take it from you. Only you can get rid of it, you can pass it down, you can sell it or whatever, but nobody can come, a stranger can't come and have a legal maneuvering system to leverage it out of your hands. Whether through, so I can't get away from the benefits of that. Broadening the tax and lowering it, in property taxes. So many of our property tax services are not. So many of our property taxes go to items that are not property services. They don't serve the property itself. Now, fire, that is an easy example, but so many of our locally funded services go to everybody. And I think it's completely just to look at everybody and say, we've got to pitch in a little bit. And I don't think that this bill overdoes that. I think you hit some niches that are really good, while still serving those two philosophies that I've identified here. Thank you. That's off my chest now forever.
Okay.
Senator Winckler, I admitted it.
To follow up on that here, and like to Senator Schultz's point, like the target of this bill is not to come after the losers, and the winners here. It's just like, how do we rebuild a new system, right? But I have to hit back hard on the fact that, when there has to be some historical accuracy to this entire discussion, right? And clearly, there was no other entity in this state over the last 10 years that got a 50% cut to their property taxes and stayed in line with rent rates going up through the last 10 years, right? We can't accept that, there are real consequences. At the same time, too, there's another truth here as well, too, right? And the biggest truth is that rent rates are dictated by the market, what people can pay. Because if it was dictated solely by property taxes, those numbers wouldn't look accurate. In part of the 2013 bill, I know everyone was doing their best attempts, I'm not going to throw shit at Senator Schultz here, but it was the best that people could do, and frankly, there's a lot of property tax cronyism going on there. And I'm not going to go any further on that, but talk to anyone who's around this building at that point in time, because it sure as heck wasn't me. But that wasn't a property tax reform bill, that was partially a property tax cronyism bill. And I had the damnedest hard time sitting back and say that we're going to reform the system and keep cronyism in place. It might not be perfect, but I have a hard time sitting back and saying that we're going to honor all the past deals around here, when primarily those were, well, I would say that, to some extent, those were campaign donations. Certainly wasn't real policy. This is still a work in progress. As I said before, we are working through some things, and there are good conversations going forward, right? But this is tough. Said before, we have over 3,458 taxing jurisdictions. Simple simply will not work. And I promise everyone this, anyone's looking for simple in this room, we're gonna be back here in 2 years if we do a simple fix. I think the goal of the Senate is to do something beyond simple and something comprehensive, something that provides some relief, something that families actually see their bills go down, and something that's a little bit more fair across the state of Iowa. And in the end, make us a little bit more competitive, hopefully a lot more competitive. With a guaranteed exemption for homeowners, property you own for yourself, property you own for income, better quality roads and bridges, and the promise in the end, if you own your home, you're done paying voluntary property taxes. That's the vision we're trying to achieve. There's a lot of details in here. But I do know ultimately in the end, we are gonna have to work together to plow through this building, because the nature of it says otherwise, and we have to fight for items. That concludes subcommittee. Appreciate everyone.